The broadcast is now starting. All attendees are in listen-only mode.
Hello, Face. Let's have a great week. How's everyone doing today? Yasser, Zig, my bro, William Carlson, everyone doing okay? First of all, I'd like to start off with I'm so relieved that our teammate Belu, who had to go in for, almost emergency surgery, is back in the saddle. Okay, so that's the best trade that I could come up with so far today, is that Velu is good and back at work, and hope he heals with the speed of light. So now let's talk about making money, right? That's what everyone's interested in. So here's a few of my thoughts going into the week. First of all, I talked about for a while to Here and Face and to my mentees that January was going to be a positive month for most asset classes. So it was for stock indexes. So it was for commodities, crude especially, and the precious metals as well. And now we're near the end of the month. So the month ends Thursday. Two big events, the Fed. I'm not sure if they're going to, I think the foreign exchange market might be ahead of themselves from a Wall Street Journal article last week that the Fed was considering. There, my mic was at my head. They were considering stopping QT, running off the balance sheet. And that may be premature. So why would they, when it puts a bid in the dollar and a bid in the bond market, why would they stop? Only if we had a crash, in my opinion, they would stop. Okay, because then their tax receipt machine is turned off. So I want to start with the yuan, pretty tight correlation with gold, yuan declining, precious metals going up. Some people were talking right in here 670 for a target. So if we start to head up, even though gold's making a new high, there could be a short setting up there this week based upon this correlation. A little bit too much short-term mo for me to try it here. But on the big picture, the daily, gold is not confirming at new highs, but I have to let it do a little work because look at the RSI on the 4. So, maybe it pulls back and makes another attempt, another run. 1 hour, very strong momentum. So now if we start making new highs, look at this reading, 83. So markets rarely peak with this type of reading on the 1 and 4 hour. So I'm going to let it do some work into the Fed. Also, we have the NFP on Friday. And here's my thoughts, even though the euro's stronger, much stronger than the pound, that I'm not convinced this is a major bottom. I do want to tip my hat off to Blake on Friday. He called the squeeze and face. I think we're trading here. He said as long as we stay above 13, he was looking for a squeeze. That was one heck of a squeeze. Everyone who got bearish thinking we were breaking down. I even tried to sell a rally to 1330, 1350, got out in the 60s. So great call by Blake. Anyone here take that trade Friday? Blake was talking about the short squeeze. You remember it? Give me why if you remember it. Okay, good. You remembered it? Okay, Joan. David does. Okay, you guys are members too, right? You're all subscribers. If you're not a subscriber, that would have paid for your subscription for a year. 10 years on a one lot standard size. Okay. Anyway, so great call, Blake. I'm thinking that we're not going to go to 1550. and maybe sometime this week, maybe because when I was trying to get long down here, I was looking for 1460, and it's 61.8 back from here. So I'm actually looking to buy the dollar. When you look at the dollar index chart, as bad as the week was, look, it's possibly a right shoulder developing here or a triangle. And if the S&Ps are going to roll over, although I'm looking for another high, above these highs to be taken out, maybe all the way to 61.8. So if that's a story, maybe, that's while the dollar is still working lower. The S&Ps aren't going to, if we're going to have a big dollar rally, I believe the catalyst is going to be a sell-off in stock indexes and a flight to quality. I don't think it's today. I think it's between Wednesday, Friday, maybe next week. And then I want to wrap it with something that I've been waiting for a while. I know some very good trading minds that believe that Bitcoin had bottomed, okay? And it's still real possible that Bitcoin has bottomed. And it's a pretty tight trade from here. So I was looking for 78.6 back all this time. I mean, I've been waiting for weeks for this target 78.6 to get triggered. And I'm looking at all these long wicks here, and here. Might be a 3 drive, no divergence here yet. But it's a tight trade. If you want to get long, you just risk the low of the move, 3,200. So in Bitcoin, risking 150 bucks is, not a bad proposition. You don't want to stay long into new lows because then we're talking about some type of 3 drive, which, is going to take it well under the big round number of 3,000. I'm figuring 28, 27 for a capitulation move, but there is potential for it to hold in here and not make new lows, and you're buying a very deep retracement of 78.6 if you want to give it a shot. And I'm not sure if we reached objectives. Steve Volge called the bottom off this breakout of this triangle. Not sure if we got there. And even if you're a bear, why can't we just have A? And this looks corrective to me after this, and then get another one of these for C. That could take you back to this major breakdown area around 5-6 grand. So those are some of my market thoughts. I share in phase what I share with my mentees only a little later. And let's have a great week. It's going to be action filled with the Fed and NFP on Friday. I have a good lineup, a great lineup for guests. Shy Girl's going to be here. So, if you're an energy trader, Shy Girl really focuses on the energy. We have a crypto guy, Trader Main, with us. Today, it's Kevin Muir. Should be a great week as far as interviews, and consider it part of your intelligence gathering. And with that all being said, don't forget, immerse yourself at ForexAnalytix. And you could just put your toe in the water. You don't have to jump in the pool all in. Get a feel for what we do here for $1. And that'll give you access to everything, including the members chat. And that way, when you're trying to navigate the markets, just like when you're driving, you need a dashboard. And if you're not getting rebate checks and reimbursed for your trading activity, you need to give Jason and Trent a call at Forest Park FX and handle that. And it's just mailbox money or pay for your subscription if you're outside the U.S. Does this week's news bother me? No, David. I don't try and predict it, but love to react to it. So I actually enjoy big news days. Okay. So Blake, I just want to congratulate you. That was a very an excellent call on Euro on Friday. Knowing you, I'm sure you pitched it.
Actually, I didn't. I was well,
Wow.
I'm thinking if I don't think I did. I was long the cable. I was long a lot
Uh,
of pounds, so that's where I made my money
uh,
on Friday. I
oh,
had a
okay.
I had a good Friday, and but I was long the cable. I think it's because I was so short the dollar, long the pound. I didn't venture into the euro.
Yeah.
Um,
You
you
don't
know,
have to be in. All it takes is one, Blake.
oh
Everyone thinks they
yeah,
have to
no.
have, 10 different positions on for a portfolio. And I knew guys that never left one trading ring or pit in Chicago that did pretty well just knowing one market.
Yeah, I mean, and usually it's the cable's not my weapon of choice in the markets, and but it happened to be on Friday because I was already pre-positioned that way, and I was in some of the pound crosses, so and it worked out really well. Now, as far as what to do with the euro as it stands at this moment, that's the here. Let me grab the charts. For me, I'm trying to buy a dip. It's just the question is, are we going to get a dip? And this is like you got the 1 hour chart, and frankly, I'm just trying to buy some sort of dip down to 113.80, 113.75. I just don't know if we're going to get it. I'm hoping we get down here, and then I can go long. And I might end up missing it. I do want to be short the dollar, though. I want to be short the dollar ahead of the FOMC this week. So, yeah, that's that.
Yeah,
That's,
you
that's
think Dubs are going to cry
well,
and the Fed statement?
Well, okay. So with the Fed meeting on Wednesday, I'm thinking that the market is at least going to be concerned that we might have a dovish Fed. So I think the trade going into the week, into is going to be short dollars. So I think the euro is gonna make its way up to 114.50 this week. Maybe even a little bit higher than that. So what I'm trying to do, I mean, I could just blindly just buy the euro right now and close my eyes until Wednesday and hope for the best. But I think we can get a better price. I'm hoping we can. I'm hoping I can at least, and that's how I want to play it going into Wednesday. What happens from Wednesday is, it's obviously, like you said, it's more of a reaction. That I'll look to react to the market. The other trade that I'm looking at the moment is the cable. I think the cable's under a little bit of pressure as we go into, got a little ahead of itself on Friday. I mean, we closed at the highs on Friday and well above the 200-day moving average, and now we're coming back off. So,
maybe
I'm
back to the breakout, huh, buddy?
Maybe, I'm thinking, 130, 130.50, but I'm not buying it here, that 130, 140. So my 2 cents is I'm probably not going to get an opportunity to buy the cable until, we get back down here. And that's like, if the pound trades down to 130.50, let's just say roughly, then hopefully it drags the euro down to 113.70, 113.80. I'm hoping that's the case, but for right now, I'm not willing to buy the the pound or the euro at current levels. And then the next question that I always get from traders is, well, if you're not going to be long, why don't you just go short?
Oh yeah, I used to do that.
Yeah, and that's not
the trade.
No, it's not the trade. I'm not looking to be, short the cable. Or short the euro for that matter. Just because, that's like a very common new trader mentality. Well, if it's not going up, then it's if it's not going up, then you obviously think it's going down. So why don't you just short it right now?
Yeah,
And
or Blake, I used to have so much confidence in where I wanted to buy and sell it that it would happen. I said, well, why don't I ride it up and down to the up or down to that area? But you know, those areas don't always manifest, and that wasn't the trade.
No, yeah, exactly, and that's the point I'm trying to make. Is
Yeah,
look, I think ultimately the cable's going to 135. So, do I want to short? No, I just want to be long, but I want to be long on a dip. And if I don't get the dip, then I'm going to miss the move, and that's fine with me. It's okay. But a lot of people really struggle with that, and they feel that they need to trade the markets in two different directions or both directions. And I frankly, I'm just not very good at it. And it's, I know there are traders out there that can, trade both directions. And, but I have to see the right setup. And for me right now, it's I want to be short the dollar, but I don't want to be the short the dollar right at this very second. The other, and I'm going to take you through some of these majors really quick before I pass it over to Steve, because I had a comment on the week ahead video that the video was pretty short, and I'm like, there just wasn't a whole lot to talk about. I mean, and there's where I'm in a situation where I didn't go in. I took advantage of last week pretty well. I mean, I took everything off the table on Friday, made some really good money going into the end of the week. And it's like, coming into this week, everything's kind of, I want to say mid-range or back in the range. So I don't want to, I didn't want to be too aggressive at this point. I have to see how the beginning of the week, how it takes us. And, my thoughts have been validated up to this point because I'm seeing the pound pull back, which I had expected. The question is, how far do we go? So, like I said, with the euro, I'd rather be a buyer down here at 113.80 than at current levels. The pound, I'd like to be a buyer down at 130.50 than at current levels. The Aussie, we have inflation data. Is it tonight? Let me remove this really quick. I think it's tonight or tomorrow night. Let me just double check. So inflation data tomorrow night, Tuesday night. So Tuesday night, Wednesday morning. I think the Aussie, as long as we're below the 72-cent level, I mean, I think the risk for the Aussie is, back down here. So, I mean, if the pound pulls back, if the euro pulls back, the Aussie is probably going to pull back as well. The Kiwi, the Kiwi broke out of this triangle to the upside, but I'm not chasing it up here. I'd like to see it maybe come back down to 68 cents, perhaps, before thinking about buying it. So I'm not a buyer at current levels. The dollar Canadian, we have this potential bear flag, but the risk at this moment is that we didn't make, if you take a look at this, we didn't make a lower low yet. And if equities stay weak, or, because they are a little weaker this morning, but if equities stay weak today, then the risk could be for the dollar Canadian to pop back up inside the flag. And then, if the dollar Canadian gets back above 133, the risk could be to squeeze a little higher. So, there's the dollar Canadian, US dollar Mexican peso still trying to pivot off this longer term trend line down here. This is actually one currency pair that I might pick up at some point today on a dip. The dollar Swiss not doing anything with the Swissy. We struggled with the 618 last week, and if you were looking at the ForexAnalytix analysis from last week, I felt pretty strongly that we weren't going to break higher, that we were just going to pivot off the 618 and roll over. We are rolling over. It hasn't been very aggressive, and no, I'm not trading it, but it's rolling over as well. The US dollar Norwegian krona, big long-term head and shoulder pattern. One of the major banks, one of their trades of the week this week is short the US dollar Norwegian krona. I can't remember which bank, and I read a few big bank research this morning, but one of their trades of the week is short US dollar Norwegian krona. And if you guys are ForexAnalytix subscribers, you know I'm already well on top of that. And I think the US dollar Norwegian krona is a great short. This is one of those that I was going to short on Friday, but I was so captivated by my pound trade. I was too involved in that to really take advantage of being short the US dollar Norwegian krona. Matter of fact, last week I shorted this at 860 here, and I closed it at like 858, and not all the way down there, but I closed it somewhere at 858, took it off the table, and then didn't reshort it on Friday, which I should have been reselling it up here. And like I said, I was too involved with the sterling to pay attention to the Norwegian krona. But I think that overall, the US dollar Norwegian krona is going to roll over. And this is one of those currency pairs that I think you got to be watching going into, this next or this week, especially if the Fed is extremely dovish and we get crude oil, which crude has like this nice inverted head and shoulder pattern longer term. I'll let Steve go over that chart. So he'll probably show you that chart. But if crude can rally this week, that's just going to be another feather in the cap for anybody who's short the US dollar Norwegian krona. So that's, something that I'm obviously paying pretty close attention to. And the last major I'll talk about is the US dollar Japanese yen. And I know I had mentioned the yen pairs on the week ahead video, and frankly, while we're below 110, I want to be on the short side. I talked about this on Friday, and I had one of our listeners, he harassed me on Twitter because he goes, "Oh, you wouldn't want to be short the dollar yen at 110," and then it broke down. It's like, no, I mean, not at that moment in time. I didn't want to, but looking at the price action now, as long as equities stay, equities are actually breaking lower this morning. As long as equities stay weak, then there's no reason to be long the dollar yen while you're below 110. And especially with the euro yen at 125, the Aussie yen near 78, I think those are trades as long as equity markets stay weak. But S&Ps are actually breaking down right now. We are in earnings season, so Caterpillar's down 5.2% right now because of their
Caterpillar was missed since 2009. That doesn't ring well, right?
No, I mean, Caterpillar is one of those companies that
leading indicators. Yeah,
it is. I mean, what does Caterpillar do? I mean, it's a agricultural equipment company. That doesn't speak
and
well
construction
to global, it doesn't speak well to global growth, right? So
yep.
Blake, we have a lot of Caterpillars that came into ForexAnalytix that are now butterflies and broke out of the cocoon and have had major advances in their trading talent. How about that?
There you go. That's one way to look at it. And good morning, Steve. How you doing today?
Good.
You like butterflies, Steve? Come on, man.
Hearing the coach waste his talent, he should have been a poet or something. I've told him multiple times.
Yeah, probably. That would have been much better off being a poet.
Couldn't have been much worse off, buddy.
So if you look at the S&P, one of the things just at initial glance, and everybody knows because I that listen the week ahead video, I'm really focused on the S&P not breaking this underside of this trend line. Big resistance up here, but we also made a lower high. And that's going to be significant, especially if we break through the support right through here. It's going to be fairly significant. And then you have the makings of a possible, bigger reversal coming in.
I hate those lower highs. They don't give me divergences.
You
know what I mean?
Yeah.
Maybe it is a sign of weakness that it couldn't even take out the stops over that high.
Sure. I mean,
Yeah.
so I think you gotta, be a little careful with risk up here, and yeah, that the Caterpillar earnings have not are not helping anything at the moment. So, so Steve, what else is going? How's your wife? Since we all know, the whole community knows that your wife isn't feeling well. How's she feeling today?
She's better. She's better.
Good.
Her X-ray shows that there's definite improvement. So she has to take it easy for a few more days.
Good.
And she should be fine.
Well, that's great. No, double pneumonia is not something you want to mess with. That's
yeah. At least it was at the beginning. So we caught it early.
Good. All right. Well, I'm going to pass it over to you. Hope you guys. I'm sure there actually is a lot more to talk about as far as the crosses go. The pound itself has been. The majors themselves have been kind of boring, but I think the cross rates is where the action's at today. So I'm going to pass it over to you, and I guess Stelios is probably back. Good morning, Stelios from
Hello.
snowy northern Athens or northern Greece.
Hello, good morning, everybody. Actually, I have one thing to say before we start.
Maybe
made a very nice comment. He said about the week ahead video. He says it's not, better to have a short good video than a long bad video. It's exactly like my wife says. It's not the size that matters, it's the quality. So there you go.
Oh, she's so kind with you, Celia. She's so kind with you, Celia.
Don't start going in. It's the motion of the ocean type of thing. All right. Hey guys, have a great day. Bye.
Bye, Blake.
All right, enough of your Marvin Gaye rendition of sexual healing. What's going on in the UK, bro?
Right. So we have
tomorrow, big day, Celio.
Yes, tomorrow is the next vote. There's going to be a few amendments tabled before the vote, and there's quite a few of them. There's like 10 of them, which
turning into reality TV already.
Yeah, sure. It is, and it's very hard to keep up with it.
Young and the Restless. Yeah. Although by the time this is going to be over, it's going to be like the old and the dead or whatever. It's already taking a lifetime.
So yeah, that's happening tomorrow, and surely it's going to be moving the pound, which a lot of people have been talking about this in the chat room, especially. The pound is a bit quick to price in now. Some good things. We're kind of semi-pricing a good chance of some kind of agreement happening, and most likely, at least in the short term, it's the pound could be vulnerable. Specifically, in tomorrow's vote, you never know what's going to happen. And the European Union, their stance has been very specific, and it hasn't changed at all. And no matter what the people in the UK vote, it seems that they are still, they still say this is the deal or no deal. There's no ambiguity and there's no wiggle room. So let's see how that goes. The other thing that happened on Friday, I was traveling, but I did read about it afterwards, was that, most people are aware that Trump kind of took a step back and took a small defeat and said, okay, the shutdown is off for now. So we know without getting anything.
Is off. End of story, Stelio. I don't think he's that stupid. In my opinion, that was a huge political mistake because, if you're willing to go ahead and, and blackmail, you need to be willing to take it all the way. And since he had to back down now, what would change that dynamic? And let's say in the next occasion, make the Democrats more likely to succumb to pressure first? Nothing. I mean, since he has already caved once, I think that's going to make it even less likely that they're going to accept any kind of deal or demands. They're going to have to, take it all the way and, make him do it a second time. And I think he learned his lesson. I don't think we're going to have another government shutdown. That's my personal prediction.
You may be right. It's very, very possible. So
I think that's dead. End of story. He's not trying it again. That's what I think. And I think that he's going to try to shift the agenda to something else and, let the whole wall thing die down or whatever, unless we get another out of market volatility or whatever, and then he needs something like that to take the to take the public discourse, the public discussion, of the main issues, and take it somewhere else. But I doubt he's going to try it again, because it was quite embarrassing, I have to say.
Yeah, let's see.
Well,
I mean,
maybe Venezuela could be a great distraction.
Oh yeah,
The
absolutely.
next distraction. What do you think? You think we're going to do anything? I mean, they do have oil. You think we're going to, besides evacuate people of the military, do something to back up the opposition candidate?
It's not unlikely.
Militarily?
It's not unlikely, and I can tell you, generally I am against interference, and I do think that the U.S. In the longer term has paid duly for the interference abroad. I mean, every time the U.S. has interfered abroad, has had short-term gains, but in the longer term, it's proved to be, more of an issue than anything else. But needless to say, the situation in Venezuela is extremely dire. People are, dying from hunger. The thing is that I have really no clue what kind of guy the one they're trying to push as the new president is. I have no idea.
Ultra right wing.
Yeah,
the
I mean,
opposite.
I don't mean I don't have any idea in the description, but it's a different thing getting like a one-liner description and actually seeing what kind of a person or what kind of beliefs or what kind of a system that guy would want to impose. One thing is for sure, the situation in Venezuela can't really get worse than it currently is, right? Because it's
it's a little bit dangerous. Don't you think it's a little bit dangerous that Russia and China are lined up on the other side of?
Of course they are.
It's not, okay, that kind of complicates it, doesn't it?
It's not by accident. It's not by accident.
Yeah, right. Okay.
It's not by accident. You know how it is. It's in essence a power play. It's a chess game on a different chessboard. You know what I mean? Because it's just simply who's gonna get. It's more of avoiding the other power to control things there.
Then because of the oil. They don't care about the people. It's the oil.
Of course they don't care about the people. It's about the oil, and it's also about, don't forget, it's also about balance, right? Power balance. Because don't forget that every time the big powers actually struggle to gain one way or another, directly or indirectly, influence in a part of the world, it's also a power play, because the rest of the countries are watching and trying to assess who has the upper hand. So it's also a power play. It's very important, right? And usually that's why we end up more or less having standoffs. I mean, with the recent exception of the situation in Ukraine, in which actually Putin clearly won the game there, right? Because he didn't
Crimea.
care about Crimea, annexing Crimea, other than that, usually we get some kind of a standoff and more or less nothing happening, just one power preventing the other from gaining control of the country. That's it, more or less.
How are you going to make money this week, bro? In all of this?
Still use the CAD. I mean, but I have to say here, because Stelios mentioned it, I have to say that we have had a technical event taking place now in the cable, right? Because the cable has broken the 130 area, has broken the 131 area and the 200 daily moving average. And once we prove that this is not a false break, I mean, for example, if we come back and retest this area and move higher or whatever, we have now got very close to the part that people can start getting really, really squeezed in the cable. So, for example, if something even slightly positive comes out within the next 30 hours from the UK, there is a very good chance that short sellers are going to start getting squeezed, and then it's going to be a domino effect, because we know that the market's still quite short the cable. So I would be quite careful here. I mean, I have no position at the moment. Blake was on top of it, since much lower. As you know, I've said it multiple times. I think that the euro and the cable are a mess. I mean, if you're not trading very short term, I think the best thing you can do is just stay away from them, because they've been extremely choppy, and more or less they spend multiple months not really doing anything. But even if you want to trade the crosses, you have to be aware of the fact that there is a good situation here, a good potential for getting some major squeeze coming from the cable. By the way, the cable hit the overbought territory in the RSI for the first time since September. In September, we did that only extremely briefly, and the previous time before that, we have to go back to the double top in April, which is signified when we hit again the overbought area in the RSI. It actually was the day that we posted this double top, and from that point on, we started depreciating fast, and which took us from almost 144 all the way down to roughly 125. So RSI is also going to be the tell, because if we see that this is not just a touch of the overbought territory in the RSI, I think that's also going to prove that there is some kind of a change of behavior here, and I think we shouldn't ignore it. Now, at the same time, keep in mind that this can easily have spillover effects for the euro, simply because one of the most liquid currency pairs and the most traded is the euro pound, right? So euro pound did break below this horizontal support area. It's making an attempt to rebound today. If we get rejected from here, I think that we can see more weakness going forward, and that will definitely, if that proves to be the case, will definitely help the pound overperform for a period of time. So it remains to be seen what's going to happen from here, but definitely euro pound. You can even, if you want to isolate this area of the chart, this one, you can even view this as a double top formation, right? Here and here, in which case, on a break below this area, we have, let's say, roughly from 87 cents to 91 cents. That's 500. So that would target roughly 82 cents as a downside target. So if we confirm that, you can even see it as a double top formation, as I said, with a target roughly being at 82 cents, which is down here, more or less. Okay. Yeah, down here. So you should pay close attention to this pair. Let's hope that it's finally going to get unstuck, because as you see, this more or less has been a very prolonged expanding consolidation, right? So let's hope that we're finally going to see a resolution from here, and not another rebound, which is going to keep us more or less in this area. Now, let's go back to crude. Blake mentioned that there is a potential for an inverted head and shoulders formation here, and yes, that's the case. It's quite clear. You can see here, shoulder, head, shoulder. Shoulder is still building. This on the shorter term might prove to be a triangle. It might prove to be some kind of a zigzag. We might come a little bit lower and retest the 49.50 area before moving higher, but it looks quite bullish to me. So I do think that the break above 55 is going to confirm that there is more strength, in which case I will be looking for a squeeze higher towards 60, perhaps, why not, even 62 and a half, 30. So I am looking to buy crude, but only if it humors me and manages to dip somewhat lower from here, because I don't like the risk reward for me to be buying it here. So if it wants to do me the favor and move a little bit lower towards this horizontal support zone, I will be more than happy to buy it, because in essence, crude in comparison to FX is quite levered, right? So you always need to take into account the average true range of whatever you're trading. So for example, as you know, those that are in ForexAnalytix or that you're watching the webinar daily, I made on average on my position more than 10% in crude being long at the beginning of the year. You very rarely can make such a profit in trading effects, right? So that's why I prefer to sell the USD CAD initially, because in essence it's like, a lower leverage trade, because I know that even if crude dips, lower from where it is at the moment, I'm going to find myself just slightly out of the money, in terms of, a percentage. And if crude, does the move and then it behaves properly, I'll gain some exposure in crude as well. And Blake already showed, so I don't have to go over that USD NOK is also forming a head and shoulders formation at the same time. So it's not done yet. I mean, we haven't reached the neckline yet to have a breakout, but all of those point to the possibility of more strength in crude and more weakness in USD CAD and USD NOK in the days ahead. And I think that this remains probably the most interesting and best looking trade out there. That's what I still believe. Now, if we were to go to the metals, if you remember, I was looking for a potential squeeze from here because both gold and silver were testing support. So I said, there is the potential for one more squeeze higher. And we did get more or less a major up day on Friday, both in gold and silver. Now, is that done? Likely it isn't, because so far today, as you see, we are paring back like a fraction of the gains. So I think that that gold has the potential of squeezing to the 78.6% fib, which comes at 1320. Silver seems to be performing a little bit worse, and we are seeing some divergence here. I mean, gold did posting a higher high, crude didn't. But I still believe that crude can make, what is it with crude today? That silver can make it to the 61.8 at 16, or even a little bit higher, because we have a horizontal support resistance area at 1610, 1615, somewhere there. I think it's going to be, a good area to find some real resistance or some kind of reversal. So I wouldn't be buying it.
You become like a Saudi instead of a Greek.
Yeah.
Oil on my mind, buddy.
And by the way, not accidentally, we've mentioned that many times, right? The gold silver ratio is behaving properly. I mean, now that we're seeing again, like metals doing fine, we're seeing a move lower. And if you remember, we drew that, several days ago when we were almost at the low, that we might have a rebound and a push lower. And so far, this is playing out nicely. But as we've said, the key level to watch here is this major long-term horizontal ascending trend line support, which comes roughly at 80 at the moment. Yes. Yeah. So we can make it all the way to 80, but then it's going to be all about what we're going to do with that trend line. Because if that trend line breaks, that's going to be a major development, and you can't ignore that development. I think that the whole market is going to be paying attention to that development. Palladium still holding within this ascending channel, so we still haven't had any major developments here. Platinum, still underperforming, barely holding this channel. Platinum looks extremely likely that it's going to be the first one that, when metals, take the south direction, the first one that's going to break lower once again. As you see, it has been barely behaving itself, despite seeing some much bigger gains in all the rest of the metals. So I think that platinum is going to maintain its position as the weakest, at least for a period of time. And copper, once again, despite having that major move higher on Friday, still holding this triangles broken support as resistance. So I'm looking to see what's going to happen from here. I don't have any position yet. I took profits on the first half. The other half was stopped out at break even when we retraced. But if I do see some kind of a rejection from here and some acceleration lower, I won't have a problem, gaining exposure once again. So this is the trend line I'm watching, and I do think that it's going to be interesting, because it's also highly correlated usually with expectations for growth, and lately expectations for growth have been playing quite a big role in how the markets are performing, because we've had periods that the market didn't really care how expectations of growth were, but it mostly cared about, what the monetary policy is. So, I'm going to be closely paying attention. Now, going back to the indices, copper, yeah, there is a bear flag. That can be a bear flag, as Neil says here in copper. You can see that, Neil, from COTs, and we know that the DSI has been heavily bearish for a huge period of time. Like it's been many, 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 many months. The only reason Trump caved right now, it allows him to give the people a State of the Union address on the 29th, so now he can tell it like it is. I doubt that's the case, Tom, but I think that we're going to find out soon. I mean, let's see if he's going to shut down the government once again or not. And I'm pretty sure that that he's not going to get something, so he will actually have to prove if he's willing to shut down the government once again or not. I think we're going to find out within the next few weeks, right? Theoretically 2 weeks, but you never know with politicians. It might take longer than that. Okay, so
be a
back
bad
to the
time
indices.
for it to happen for the market, Steve, because we have the debt ceiling in early March. So if that happens again, we're going to have debt ceiling issues.
Debt ceiling issues. I really don't even understand why
It's
the
not
US.
a ceiling, guys. They've raised.
Yeah, it's not, exactly. That's what I want to say. I don't even understand why the US still maintains this facade, this joke of theoretically the debt ceiling. Every single time the debt ceiling has been hit, one way or another, the debt ceiling has been, lifted higher. And, there is absolutely
How
no
high is it now?
20 something trillion. Who knows? I mean, who knows? The big issue actually is, Jeffrey, I actually retweeted him with a quote. Jeffrey Gundlach actually tweeted earlier, yesterday night, actually, my time, like currently 122 trillion US unfunded liabilities per debt clock. That's 564% of fiscal 2018 GDP. To fund would require 10% of GDP for 56 years. That's the main issue. It's not only, if you remember, I've mentioned it multiple times, it's not only that the fact that, the US has increased its debt to GDP amazingly within the past 10, 11 years. But it's also the fact that, as I just read you from Gundlach, there are 122 trillion unfunded liabilities. So, what I answered back is, don't worry about it. Nobody's paying for that. It will either be eroded by inflation, partially wiped out, or a combination of the two, because there is no other way out of that. As simple as that. It's either going to be the hard way, what Greece did to Greeks, that one day they said that, listen, all the pension and funded liabilities, there is no money to ever fund them, so we'll have to do a haircut. End of story. So it's either that, which is at least, let's say, somewhat an honest way of approaching that, or it's, inflating it to eternity and then, nominally paying it back one day, but, just nominally, because, the money is not going to have that value, not even close to it when the time comes. And, it's completely immoral what's been happening, because, especially the past 2-3 generations have been actually piling debt, which, as you very well know, debt, in essence, what is debt? It's a transfer from future wealth to the present, right? So in essence, you're borrowing money from future generations so you can have a better time today. So in essence, you're borrowing money out of the pockets of your children, your grandchildren, your grand-grandchildren, to have a better time today. And, you hope that somebody's going to find a magic wand or a genie that's going to, clap its fingers and, solve the problems magically at some point in the future. But, rarely that's the case, right? I think you had an excellent guest last week, the one that was talking about the contrary cycles and how, in essence, it's all about Debt. Yes, exactly. In essence, it's a cycle of debt. And he said specifically that we are now in the winter part, right? That's what he said, if I remember right.
Yes.
Yeah.
Yeah, that was Henrik Zeberg.
Yeah,
Bearish,
that was
bearish everything except bonds and the dollar because of it. So he has a little different take than you because he thinks, you know,
something.
that
bonds can overperform in the short term once we
Right.
get a crisis kickstarting. But after that, how do you get all that debt going away? How is it going to fly away? No, it's not going to fly away. How's the debt going away, Dale? Now, let me rephrase. Let me rephrase. How is the debt going to go away without destroying bonds in the process? That's the actual question, right?
By destroying the economy.
But you know
that would work.
Not really, because how can a destroyed economy repay back its debts? 100 cents on the dollar.
All right.
Right?
Yeah. I feel the walls closing in on me here.
I'm wondering, is the wall going to be? I'm wondering, is the wall going to be for the people outside or for the people inside?
They're built for two reasons, my friend.
Yeah.
Keep the cattle in. Keep the cattle in.
Sure, if you know any people that are old enough, they can tell you that, for example, in Eastern Germany, the walls were not to keep the outsiders outside, but to keep the insiders inside, right?
Yeah. I tell you what, I'm hiding all my razor blades right now, Steve. All right. Thank you. Thank you for cheering us Americans up today. You've already been through it. Trust me. A lot of us think it can't happen here.
It's not an American issue, but you know, people in America still live in a fantasy that things in America are completely different. But you know, the economics don't lie. You know what I mean? The numbers don't lie. Things are not different. Things are still different because there is still faith in what seems quite impossible at the moment, that the US at some point can respect its debts and fulfill them in the future. But I think that the way the US has been handling its economy, it's less and less likely by the year. And at some point, you know,
we're sailing our ship on denial.
Hey guys,
not the Nile River.
Hey, Gregor.
Hey, how are you? I was just mentioning.
How are you, my friend?
Oh, you're supposed to get in there and interrupt Steve.
Yeah.
Go ahead, buddy. Save us, man.
Okay, so Gregor, you're going to be the one answering this question. What's happening here with pound kiwi? Corrective zigzag to the upside or inverted head and shoulders formation? What's your take here?
I think that the inverted head and shoulders formation is still a valid point. And even if this is only ABC up, we still may see 1.960 before going lower.
Yeah, I agree with you, but I don't know if we're going to fulfill the inverted head and shoulders target. I mean, I do believe that, as you see, I've drawn here since several days ago that, you know, we might go a little bit higher from here. I doubt it we're going to make it to the 78.6 that I've drawn here, but we might, and then I'm expecting lower. So that's what you're viewing as well.
Yes, and I'm actually looking at cable, which I think it has room for. Just let me look. It has room
cable
for
can squeeze actually from here
to 1.33. I think it may go a little bit higher after a corrective setback. So
somewhere
I think
here. Okay.
Yes, those previous highs. So I think that at the same time, pound kiwi can also see more upside.
Okay. Any chance that cable can squeeze even higher than that, like, you know, 136 or whatever, or that invalidates your current count?
No, actually, that's still a very good valid point, because after all, as you know, I'm tracking a flat correction, so I'm looking for 5 waves up, and until we see 5 waves up, of course, these targets can be seen much higher. Because we are still in the middle of a wave 3.
Yeah, okay, nice. So what did you? We have a few minutes. What did you want to show? Let me pass
Yes,
you the screen. By the
I
way.
will make a quick look at commodity currencies.
There you are.
So,
I'm already short USD CAD, so be careful what you're going to say.
I mean, as you know, we agreed both last time on dollar CAD. So this one is playing out very nicely. I think there's more room for more weakness. But earlier this morning, I also warned on Twitter that we should be aware of potential higher prices, higher pullback on dollar CAD if we consider that crude oil may still see lower prices. Okay, but even if we see some rally, maybe even a retest of this trend line around 1.30 level, I still think that any bounce will be corrective, and that sooner or later we will see prices going much lower into wave C. So if we take a quick look at crude oil, what is my concern here is that we probably accomplished this 5-wave rise for a wave A, and now we can be pulling back for a wave B. So as you know, we in such case expect price to retrace back to the area of a former wave 4. This is also around 38.2%, around 50.30, and 50 is also psychological level. On the other hand, this can also be inverted head and shoulders pattern, left shoulder right. Left shoulder.
I was showing exactly that at the beginning of
yes, so,
my part. Yeah.
So if we respect that this wave C, okay, could actually occur here, then obviously I should update like this, or maybe label this as a ABC X, another ABC. Okay, so we have to be aware of potential more downside, especially if today price would close below 52.85. Then I really think that this wave C could send us a little bit lower for a deeper pullback. Obviously, there are much more interesting support at lower prices. So this is my concern regarding CAD. I can see some strength on
although this can end up being a running flat or something and not seeing new low, right?
Yes, exactly. It can also be the case, yes. But
so from a basic technical analysis perspective, it's going to be a triangle in that case. I know it's not a triangle from an Elliott wave perspective because it's not going to be an A, B, C, D, E, but you know,
yes. But the idea is that dollar CAD, even if we see higher prices, even if oil see lower prices, these are still only will be a temporary pullbacks within bigger uptrend on crude oil and downtrend on dollar CAD.
What do you think? We have a question here. So what do you think about the main indices? What do you think about S&P? And what do you think about DAX? DAX, by the way, came down, retested the inverted
gold at new highs.
Yeah, it tested the inverted head and shoulders neckline at 11,000 and moved higher from there. So I think that's a good indication that it might have more strength.
Firstly, here's the S&P 500. I highlighted a reversal pattern. As you know, I have been, despite this very strong decline, I've been warning potential bounce and resumption back to the upside. And I think that we really could continue higher. We are for now trapped below this upper trend line, but supports that we should watch are around 2,600. Also, on the 4-hour chart, I see completed 5 waves up, and now we can be moving sideways for irregular flat correction. Also, the 10-year US yields I see are in probably they are trapped in a triangle formation. Just let me look real quick on the 10-year US yields. 10-year US yields. Okay. So here's what I'm looking at. I see US yields in a triangle formation with an ongoing ABC rally. So expecting more upside here, which means that the S&P 500 could also see more upside. Okay, so that's why I see also correction on the S&P 500 here. And ideally, we are going to see lower prices while the 10-year US yields could make wave E of a running triangle here for a wave B. So overall, I think that stocks will make a pullback or just move sideways before we get another leg to the upside. Also, German DAX, as you said, also I see here 5 waves to the upside. Ideally, even here we have a deal with irregular correction that can be still underway for wave 2. So expecting more upside. Of course, maybe we'll see straight push to the to a new high, but from a trading perspective and also based on basic technical analysis, I think that much more interesting supports for a pullback would be at this triangle, previous triangle range. So we will see how this will play out, and ideally we will see this small gap covered, okay, and that in such case would also complete this rise as a free wave pattern, okay. So it means it would be seen as a wave B, right, because the price would move below this or into this territory, which means that any bullish impulse count would be invalidated in the short-term picture.
Okay, I'm going to give you a tough one now because then the coach has to start his interview. The tough one is the following: what do you think about euro? What do you think about the euro USD now that it has faked out people once again and it remains in this horrific trading range, let's call it?
We have been talking about the euro dollar is a real mess since August.
It is. It's
moved very nicely to the downside last week. Everyone expected a continuation, but this very strong breakdown, we haven't seen a follow-through. A follow-through or confirmation of such strong breakouts means that in the following day you have to see the previous lows, swing low, to be taken out, and this hasn't been the case. So actually, yes. So actually, we are staying sideways here, but I really doubt that we will go immediately higher to take this start of what it was January 10th highs out. We'll probably stay sideways here and make this ABC rise. So for now, this was a very sharp black from recent swing lows. So even if my bigger picture is bearish, I think that there's more upside coming because we need this rally to be made by free waves. So I think that euro dollar on the short term or
will remain a mess.
Yes, for the next sessions we will either stay sideways or even higher. At the moment, I'm not saying that we are going lower because I don't see ABC up just yet. Okay, so
and another first question: are the metals done? Do you think that last push that we had, especially gold taking out the high, is enough or almost enough?
I think that there is more upside coming. We are in a fifth wave. The 61.8 projection is still a little bit higher. Also, I think that here was a very important swing high back from June 14. This is our starting point when actually gold started this sharp move to the downside. So I assume that there are some interesting stops above there. So I'm looking continue to be on the bullish side, at least for now, for this 1310 level. Even on the short-term picture, here's the 1 hour chart. I don't see a 5 waves up just yet. This was wave 1, 2, extended wave 3. Wave 4 can make a pullback to these previous swing highs, which could direct as a support. Also, it comes in interestingly around 38.2%. So I think that another leg to the upside is coming. Also, a quick look at silver here. We haven't seen this previous swing high taken out yet. So if both are in fifth waves, then even silver, of course, should be the new swing high. Gold is because it's leading the way, but silver is lagging a little bit. So if I expect more upside on silver, then gold could make even higher highs as well. So I think that both are still in uptrend and good for the next three days. Maybe could see a little bit more upside while we see the S&P 500 pulling lower for that flat correction.
Does it change the big picture for sharply lower prices after this completes, Grega, the way it went up?
On metals?
Is there a change? Yeah, is there a change because of the way it went up? Someone told me a lot of 1-2s up to that point. So
no, actually, I'm still looking for this consolidation. I know that there is a very strong push to the upside from August 2011, but I still see prices actually in the middle of this consolidation that is not only from 2015, but also since 2013. So actually, if you ignore the wave structure, the consolidation is actually now 6 years old, right? So we're still in the middle of this range, and I would not be surprised if the upper side of the range would be limited. So for now, my picture of this long term remains unchanged. And also,
okay, and the alt B count would change over 1360. Your alt count that you had there before.
Yes, I would definitely look for something.
Okay.
For sure. But still, for a wave B, that's a very key level. That would still be a corrective wave B from 2015 lows, right? So in such case, I would just look for a new potential reversal from a little bit higher prices. But still, I think that gold is not done with the whole pullback from 2011 highs yet.
Thank you, Grega. Thank you, Steve.
Thank you, Grega. Thank you, Coach.
Thank you, Stel. Thank you, Blake, and thank you, Kevin, for your patience. Looking forward to meeting you. I'm going to make you the presenter now. Appreciate you being here. Great to meet you, and welcome to Face. So, Kevin, you'll see a drop-down menu there for you.
Yeah.
And there's
Hi, Dale. How you doing?
Hi, Kevin. Really nice to meet you. Really appreciate you coming in to talk to us today.
Oh, my pleasure. And I had a great time watching you guys for the past hour. I learned a lot. It was a lot of fun.
Yeah, I'm a big believer in communities and teams. You know, no man is an island, and a big believer in intelligence gathering, and that's one of the reasons I bring in guests like you. I'm interested to start off with your journey, and I know you've been involved in this market for a couple of decades, like myself. Well, 3 for me now, except that once you get up there, you can't remember how long. And why don't you tell us how you got started in the business, and if you had mentors, and what's influenced you on the long and windy, broken road of trading, buddy?
For sure. So I actually grew up in a household where my father was the research director for a kind of a boutique Canadian investment bank. So I'm a Canadian. I live in Toronto now. And so I grew up with a lot of stock talk at the table and learning about that. So we used to laugh. I used to love games, and he used to say, I know what he's going to do for a living. And I kind of, my mom will never forgive me. She wanted me to be a doctor or a lawyer, and I always wanted to be a trader.
Sounds familiar.
So what I did was when I was in university, I actually got a job at night working for a discount stock brokerage kind of division. This is in the early 90s. And before I knew it, I was the manager, and I was going to school at night. And I realized that that's not really what I wanted to do. And I'd always kind of dreamt of being a Chicago trader. So I actually came down and moved down to Chicago for a summer to work in the DMARC pit. And yeah, so that was way back when. But then I realized that that wasn't really my calling either. So I came back to Canada, and I got a job on the institutional equity derivative desk at RBC Dominion Securities. And it was RBC is kind of I guess the Goldman Sachs of Canada. It's always generally considered the best of the big brokers. And I was lucky. That's right, the best of breed. And I was lucky to be on a desk and that was very entrepreneurial and very willing to let people kind of take risks and do different things. And not only that, I got my job because what they told me was that there was guys that were better at computers and there was guys that were better at trading, but I was the right mix of both. And you see, this was in the kind of early 90s when computerized trading was just starting. And so I got a job handling all the index accounts. We used to cover Wells Fargo, which is Barclays, which was the biggest indexer. And we used to execute all their trades. And long and short of it is that I worked there. And before long, I worked myself up to be the head derivative trader, where I wasn't handling clients anymore. I was just handling the bank's risk. And I was the head proprietary trader for that at RBC during the long-term capital debacle and during the dot-com bubble. And it was a lot of fun, and I had a great time.
Yeah, and how fortunate of you to basically had your father as a mentor, even though you went out on your own. I mean, look at what people go through nowadays, Kevin, on the internet, trying to find good resources to develop themselves as a trader. You really had an edge from the beginning, and
Well,
very interesting journey. And, our mothers felt the same way. Mine said, when I went to the Florida run, when maybe you were in the DMARC pit then. No, it was the 90s. I was, I started in the mid 70s. So she said, honey, get a real job. Okay. So,
that's right.
right. So, you've gone through all of that. And, I noticed you have a website with some excellent content, Kevin. I'm going to encourage people that are listening to us now or watch the recording to check it out. What's your take on markets since we had the worst December since 1931? Do you feel that these are trading range markets, that we're going to the bull market is not dead, and this is setting up quite an interesting buying opportunity? And what are your main instruments that you trade? I see a stock chart up here of Titan Medical.
Sorry, that's actually I forgot that you guys see my screen. Sorry about that.
Yeah, it's okay.
That's it. Yeah. So in terms of my take of what's happening, for the longest time, I unfortunately I think we're in a period where the Fed and central banks mean everything. And it bothers me to be there.
Haven't we been there since 2008?
Yeah, well, you're right that we've been there since 2008, and there was some hope that Powell was going to take us off of that. He seemed to be, he came in and it really was, he mouthed some words about being different, about not being the Yellen and Bernanke academic, and showed all sorts of signs of wanting to tune for the real economy instead of the financial economy. And I really thought that it was interesting to see what happened going into his October 3rd comment. And I think that October 3rd comment, when he said we're a long way from neutral, was kind of a tipping point. And we can go through, like I realize you can see my screen here. You can see where this was October 3rd, the S&P. And you'll see that it went straight down from then. And if you do this on a bunch of things, like it's not just let's do crude oil here quickly.
Yeah,
you'll see that
they've been kind of married at the hip.
That's right, and it was the same deal, October 3rd. And you'll see that I'll pull up the chart here. This day here was October 3rd, the top. You'll do the same with credit spreads, which kind of is a measure of what investors are forcing private companies to pay above treasuries to borrow. And we'll see that this is the mirror. It was October 3rd was right here. And from then it went straight up. So to me, he had kind of come in with the idea that he was going to tighten until something broke. And then it became clear that something was in the midst of breaking. But unfortunately, he was tone deaf during that whole period. He had numerous times, including the December Fed meeting, where they could have passed. Remember Stanley Druckenmiller and Kevin Warsh, encouraged them to pass. Even during the kind of the press conference afterwards, they asked him about the balance sheet, and he said it was on autopilot. And he had all sorts of ability to kind of ease up and to do what Yellen had done, and he refused to do it. And I think that he caused the big crash of the December 24th massacre, that ugly market, because he was tone deaf. And then ultimately he caved. And if we look at what happened since he caved, it's been straight up since then. And then I think Friday, with him caving, now there's some question of whether he truly has caved, but he had indicated that he was going to be flexible in terms of rates. But up until kind of Friday, he had showed no signs of being willing to change his balance sheet rundown. But on Friday, with the Wall Street Journal article, which many market participants assumed was the Fed planting that story, he showed basically he I don't know what he like a trial balloon to say, you know what, maybe we're going to go and we're going to ease up on the QT as well.
Yeah. Okay. Do you think it's a trial balloon by the Fed, or do you think it's because of the source that it was the Wall Street Journal that they leaked that to check it out? Or do you think that's just maybe hopeful, wishful thinking that they're going to stop QT?
Well, there's no doubt in the old days with Hilsenrath, Bernanke used to whisper stuff to him all the time. And that was definitely when Hilsenrath wrote, he was a reporter at the Wall Street Journal. When he wrote, we were getting that from Bernanke. The question is that happening now? I'm not sure. But I do know one thing is that the market priced in, like, remember Friday, we had a face rip and rally.
Right.
And now, unfortunately, the Fed is in a situation where if they don't come through on Wednesday's, FOMC meeting with a change in quantitative tightening policy, the market could be very disappointed.
It seems to be setting already showing some disappointment with it down pretty sharply today and not being able to take out the high from a week or so ago. So tough call for me right here. I'm not sure what to do. There have been some outside markets that also benefited. The dollar sold off. Gold's been acting good. When we have major events like this, Kevin, like Wednesday, the Fed, I'm not sure if there's a presser followed up by the NFP on Friday, which could really contradict anything that he said based upon the numbers or confirm. And in a week like this, I really have a hard time wanting to do a lot because I feel like I'm compressed by time to achieve the outcome of a trade, because I really don't want to be there for the event. I'd rather react to the event. What do you do on weeks like this? And how do you hedge in case you just want to go through all the noise of the Fed and the NFP?
Well, I was listening to your the presentation earlier, and you said, I don't try to predict, but love to react to the market. And I thought that was just a terrific comment. And I think the one thing you need to do, if you're going to go through an NFP, your time frame has to be much, much longer. So if you're willing to sit through NFP, then that means that you're playing, instead of playing for the next 20 S&P points, you're playing for the next 100 or 200. Because the truth of the matter is that it is a coin toss and you don't know what's going to happen. So if you're trading kind of for fives or tens on the S&P, then you shouldn't have a position going in front of the NFP, and you shouldn't be. That's almost gambling as opposed to trading. You don't know the thing. You don't have an edge. And so I'm
a red or black bet, like roulette.
Yeah. And I'm 100% in your camp that why don't you wait for the market to show you what it wants to do and then just kind of climb on board. I still think it's important to know the fundamental backdrop so you understand what the market views as important, what it's keen off of, what are the issues of the day. But in terms of when you're going and you're thinking about trading on a shorter time frame, you'd be foolish to kind of try to go and just bet on a number.
Okay. So we're pretty early in the year, 2019. We're about to finish off a pretty good month for a lot of things because of the change of tone from Powell, especially when he was sitting right next to Bernanke and Janet Yellen. Do you think they had any influence on him softening his tone? What do you think?
I don't know. I'm confused about what he's trying to do to be truthful.
Okay.
He's because to me
he is.
Yeah. Well, I think he had gotten through the point where he didn't need, like, the market had already stabilized. He didn't need to cave. The market was already kind of firming up, and the worst had been, like, he'd almost seemed like to me, if you were going to cave, why not cave earlier? Like, it just seemed a poor timing to me on his part. And I don't know if you can chalk it up just to the inexperience of being the Fed chairman. He's, only, 9 or 10 months into the job, or wait, a little more than 11 months into the job. It's difficult because he probably has underestimated how much every one of his comments is going to be dissected for a change in policy.
Okay. Do you trade with biases, Kevin? Certain groups or sectors that you may have a long-term conviction level that's higher than others, and I'm curious what they may be, what you're looking at in the markets going forward. I'm assuming that you mainly trade equities. Am I correct, or do you trade?
No, I trade a lot of futures. I trade all sorts of futures.
Okay.
So yeah, I have
a view on the dollar. I mean, that's our bailiwick is currency here. Yeah, you have a view on the dollar.
Well, I don't have as much a view on the dollar because I view it too much as a risk on, risk off kind of trade too often. But I do have a view
on market.
That's right. And I do have a view on Australia dollar CAD kind of cross rate. And I view
interesting.
Yeah, so I'm a big seller of odd CAD. Like I just think that thing's headed a lot lower. And I'll kind of sketch out my reasoning for you. China is approaching their Minsky moment. It's there's no doubt that they can no longer continue with the growth that they're having, that they're adding credit at too fast a rate. I believe that this was kind of the Trump being tough on Prime Minister Xi was kind of the catalyst to him going about and putting through the tough reforms that he needed to do. So I think we're kind of at a point where they're not immune to the business cycle, even though they're a command economy, and they're going to go through a recession or slowdown. So having said that, what's the best way to play it? One of the things you can do is
you have a chart of it that you could show.
Yeah, sure. Well, so one of the things you can do, I'm sorry, I'm not used to the screencasting and putting up charts, but one of the things that people could do is they go out and a lot of the big China bears, you know, the Kyle Basses of the world, think that this is going to ultimately reflect in them having to revalue the renminbi much higher, meaning lower in value, higher in this rate. And if we go look back at this chart kind of over the long time frame, you know, it went up to 7 and it went down to 620 and it's back up to 7. But the interesting thing is that even as China has been kind of having poor economic numbers over the past kind of quarter, let's say, you'll see that it's been strengthening. So to me, I'm kind of like the Chinese currency is not like reflecting fundamental values. It's not something that you can play for kind of, you can count on it to reflect a value. Maybe someday you're going to wake up and this thing's going to get revalued at 9. I am not disputing that at all. But that's not something that I want to be trading because I don't want to be sitting around bleeding, hoping then for the big revalue higher. So I look at it and I think to myself, what is the economy that is most tied to China? Like out of the main ones, it's Australia. So I look at Australia, their biggest trading partner is China. Then I look at Canada, and Canada, our biggest trading partner is the United States. And I think to myself, well, if I don't have a view on the dollar and I want to find a pure way play to just kind of bet on China versus the US, kind of taking out the whole equation about the reserve currency and what the US dollar is doing, to me, shorting Australian dollar CAD makes a ton of sense. Now, we're both resource economies, so you're not going to get that kind of, they should move together. And when you look over the longer period, you'll see that actually it is very choppy and it really doesn't go anywhere. But I look over the last year and you'll see that it's a series of lower highs with a big downtrend. Although Canada is going to suffer from many of the same things that Australia is going to suffer from in terms of the Chinese being a big influence on our real estate, there's no doubt Canada is still more tied to China than, let's say, the US is. But in terms of Australia versus Canada, I think Australia is way more tied to to China. And not only that, they're already showing signs of stress in terms of their financial markets and in terms of their, real estate markets. So
do you think the injection of reserves last week by China was desperation to stabilize equities?
I don't think it was to stabilize equities. It was to stabilize their economy. I think that even though it appears big in the grand scheme of things, it's just like them applying a little gas. Yeah, a little bit of gas on a slowing, like they just don't want it to kind of spiral out of control. But I really don't.
They want to let the air out of the balloon slowly instead of it popping, right?
That's correct. And that's
like all central banks. Yeah,
that's right. And that's all that was. And I do not think that this was the start of a big time Chinese kind of stimulus cycle. And I'll tell you why. There's a political cycle that you need to be aware of in China. Their next big kind of event is in 2021 when it's their next plenum, and it's the 100-year anniversary, I believe, of the Chinese Communist Party. they're not, they have no desire to kind of get the economy strong for 2020. They want it go strong in 2021. And given that they want it strong in 2021, and this Felix Zulauf, that fellow from Switzerland, he's a great guy. I actually had a post of this on my blog, the Macro Tourist.
I've heard of it.
About this, yeah, and he's been talking about this for a while, and he called this a year ago. He said China is going to continue to decelerate, and they're not going to accelerate until 2020 because they're going to want everything humming for 2021. So I look at this and I think that the people, the bulls that are calling for China to stimulate aggressively now are too early. I think that it will come, but it's not going to come till 2020 for 2021 kind of stimulate. Like they're going to want it to be kicking in 2021. So that means they're going to do it in 2020. The other thing that I think is interesting is that many people look at the China trade war with the US and they look at Trump and they say, China's hurting so much more than the US, they're going to fold. And I completely agree that their economy is hurting way more than the American economy is hurting. But I think where those people get it wrong is that they're assuming that China is sensitive to the short run. And yeah, I think
they think in 100-year terms. Yeah, we think in 6-month terms.
Right. And I think you could see that President Trump was actually much more sensitive to his stock market going down than President or Prime Minister Xi was to his stock market going down. I really don't think that China is going to fold. And
Xi doesn't have to run for re-election in 2 years.
Right. And so I think he's willing to take the pain. And so when I look at this situation, I worry when the market starts pricing in too much optimism about the China trade deal and too much optimism about Bernanke being easy. So I kind of feel like it's setting up to be disappointed. And I look at this and I wonder, and you talk about the fact that Friday we got all this bullish news, but now we're acting poorly. And a market that can no longer rally on good news is a market that should be sold, right?
Right. So looking at China, they've been one of the biggest accumulators of gold for many years now. Do you think they have it right, even though they're looking at, long term? They're a creditor nation, not a debtor nation. Do you like the gold market? We've had a nice advance from the summer. Any view? Or yeah. I know some deflationists, they really tie it to the yuan. There's a pretty good correlation. It's almost a peg, gold against the yuan. And if the yuan is bottoming here, US dollar yuan is bottoming here at 670, it could lead towards maybe lower gold prices if it went above 7.
So I don't buy. So I think the Chinese price, the gold priced in yuan is actually very important, and it was something that I wrote about and brought out to everyone's attention. This level at 8,200, you can see it here that it bounced and it bounced and it bounced and it kind of formed this like there was lower highs, and then all of a sudden it broke down. And I remember at this point everyone was super bearish on the gold, and then we quickly jumped back up into the range and we were above it. And since then, we've been headed straight up. I don't think that the gold is pegged in yuan. I don't believe that by any means. But I do believe that they actually monitor it priced in yuan. And I believe that this was a floor. And I believe they let this go below there just to try it and then very quickly started accumulating gold again. And I am, a big believer that over the long run, the global economy is over indebted. And there's going to be 3 different choices that we have to come out of this. It's going to be one, people believe that we're going to be able to grow our way out of the debt. I don't believe that for a second. There's just too much of it. I just think it's people have to go look at math when they think about that. The second choice is to have kind of an Asterian style kind of 1929 depression where all of a sudden it gets written off and then you have a couple of bad years, all the debt gets written off and then you can start again. This is what was trying to happen in 2008. We had the start of the private sector collapsing in on itself. And then very quickly, the governments decided they didn't have the stomach for it and they couldn't handle that. So they went in and they kind of bailed it out. So which leaves us with our third option, which is that they inflate our way out. So ultimately, I believe that we're going to get inflation. And I think that even we will have periods where we will kind of believe that maybe we'll be able to get out without having inflation. And I think that this last 2 years or last year of Powell trying to raise rates into it and say everything is normal and everything is fine is an example of kind of that of a cycle where we're believing that maybe we can make it without inflation. But look at how quickly he's turning tail and running. The balance sheet is down what, $500 million out of from $4.5 billion, and he's already saying like that he's going to not do it. So when you go back to gold, I think that ultimately gold is something that is everyone should have some of. It's a real asset. It's nobody's liability. It will be, in the long run, you will find that central banks, nobody can afford to have a strong currency over the long run, and gold will be a natural beneficiary of that.
Okay,
and I think that, and one second before I think that Friday was really interesting, because would you not agree that gold wasn't looking great going into Friday, and then all of a sudden out of nowhere it really got a bid, and the action was great, and I think it surprised a lot of people. I don't feel that there was a lot of gold bulls like chomping at the bit talking about how it was going to go up, and then all of a sudden the thing just started ripping. And to me, when a market goes up on just like that strongly, when no one's really talking about it, no one's really looking at it, that feels very, very like it might be the start of something more to me.
Okay, I'd like to wrap it with something that I'm still having a hard time wrapping my head around. Any view on cryptos, Bitcoin? Here, Kevin.
So I'm a terrible guy to ask on Bitcoin. I have been I have a story to tell you. I ultimately I was actually in on it early. There was a fellow that worked with me, and he told me about Bitcoin at $5. He's a computer science kind of guy, and he told me about it, and I said to him, that is the stupidest thing I've ever heard. Why didn't she go back? And then kind of 3 months later, he says, that thing you told me is the stupidest thing ever. It's now $50. And to my credit, I realized that if it's $50, it could be $500 or, even more. And we started mining it and arbing it and doing stuff. And so I was actually way back when it was $100, we were Bitcoin miners and doing it all. My trouble is that I never truly believed, and I was always kind of thinking that it was a bubble. I still have trouble with it, so I'm not the right guy to ask, because I think ultimately
what a great story,
a lot lower.
Were you the guy that traded Bitcoins for a pizza that would have been
worth
I was
not.
that was $1 million now or something?
No, like that guy was a little ahead of me, but we were in there early. And so we actually had bought all those butterfly machines. We actually at one point had to move all the machines we had so many machines in our office, it was making it too hot. We had to move it into our garage because it was making our office too hot.
I tell you what, well, with the new marijuana craze, you could have used it for, what do they call that? Where it's grown inside.
A greenhouse.
Hydroponic, hydroponically or something like that.
Well,
Kevin, it was really a delight talking to you today. I love your demeanor. Some real good content talking about China, and actually having a Forex trade for people to monitor. Why don't you show your website and how people could follow you? You can follow Kevin on Twitter at Kevin Muir.
That's correct. You got it. And so the website is actually themacrotourist.com. You can go there. I write every now and then, and I used to write all the time. I'm a little not as kind of consistent as I used to be, but I have one this morning. You can see up on the top right, you can sign up. There's absolutely no kind of, I'm not going to sell you anything. I got nothing to kind of pump or anything like that. It was originally started as a blog for me, just to kind of get my thoughts down on paper, and it kind of took off from there, and I do it for fun. One of the things I try to do is I try to have a funny picture with everyone, and at the very least, if you don't agree with any of my market calls or don't find any kind of benefit to that, at least you'll kind of, I hope, get a laugh on the first picture.
I really appreciate it. What's your business model, Kevin? Or besides trading your own money?
So when I left RBCDS in 2000, I went off and I decided to start trading for myself, and I did that for the last 18 years. You know, it was happened to be when I had kids, so I got to spend a little more time with the family. My oldest went off to university, and I said, well, it's about time I go and manage some money. So I went and phoned up an old buddy that used to work at one of my competitors, and that's East West Investment Management, eastwestfunds.com, and we manage money for high net worth individuals, and we a variety of different services and products for them.
Well, like it or not, you're now my trading warrior brother, and I'm glad to know you and would love to have you back, perhaps in the spring, a little bit down the road, to see how things are panning out. And want to thank you for edifying our community today, Kevin.
Well, thank you. It's a pleasure, and it's nice to meet you as well, Dale.
All right, everyone. Thank you. That's Kevin Muir. You could follow him at Kevin Muir. And Tom Lano saying thank you, and a lot of people are saying thank you, and appreciate the content you provided today, Kevin. So that's a wrap for us here. Remember, don't just count your pips, count your blessings. And I'll see everyone. I'll see everyone for Turnaround Tuesday. Enjoy the rest of your day. Adios. Thank you, Kevin.
Thanks, Dale. That was a lot of fun, bud.
All right, man.